Hi friends, this is Chitra. Welcome to my YouTube channel. How are you all? Hope you are all doing good. Today we are going to learn about option chain analysis. That is, I am going to talk about how to analyze the option chain properly. If you are new to trading or if you are not understanding many concepts in option, don't worry. This video will clear most of your doubts. Understanding option chain is very crucial. Why? Because it will help to take only the convincing trades. So if we take only the convincing trade, what will happen? That will increase the probability of success. So what are the topics that we are going to learn today? Option chain elements and jargons. That is understanding the jargons and how they are represented in the option chain. Open interest and change in the open interest. That is OI. How to interpret and use the OI data to read the market in a precise manner. So if you are able to understand all these, we can read the market in the precise manner. Option chain. We can get the option chain from different sources. What are those? We can see that. So from where can we get this option chain? First, we can make use of the NSE website. Sensible, Obstra and other brokers. They will also give the option chain. What is option contract? I hope that you are aware of what the concept of option contract is. Now the contract is also called as derivative just because the contract itself has no value. It derives its value from the underlying, which may be a stock. So buyers get right to buy or sell underlying asset at a predetermined price. That is called as the option contract. So say for example, what do you mean by options contract? A Reliance option contract get its value from the underlying Reliance stocks. So this is the Reliance stock. Any changes in the value of the stock is associated with the change in the value of the options contract. So here in this picture, this is the picture of the Reliance stock. Okay. And this is the picture of the Reliance option contract. Okay. So Reliance option contract get its value from the underlying. So from where the option contract will get the value, that is from the Reliance stock. In the option chain, we have the option to select the desired underlying of our choice. It can be any stock or index. So this is the picture from the option chain analysis, that is from the NSE website. So here we have the option to select any stock. Okay, select options or we can select the index options. So under derivatives, we have an option called select options. So all contracts will be displayed below that. So under that, we have the futures and options. So under futures, Nifty 50 futures, Nifty bank futures, Nifty financial futures, Nifty mid cap select futures and stock futures. Same for options also. Like Nifty 50 options, Nifty bank options, Nifty financial options, Nifty mid cap select options and stock options. So this is the option chain of Nifty 50. We'll get an option to select the expiry date. So the option chain, under option chain, we have an option called date. So we have to select the current week. Current week is 13th July 2023. So every week there is an expiry. Similar to all food products, options also have an expiry date, which is the last date which can be consumed, or after that it will be no more. Means the options become 0 and it becomes 0. So that is the reason we have to select the option date, that is a weekly date. Weekly expiry is there and also there is a monthly expiry. Stock options, there is current month expiry, next month expiry, far month expiry. So what do you mean by all these? For the options, that is for the stock options, so this is for the Reliance. For the stock options, it's monthly expiry. So 27th July 2023 is current month expiry. So the next month, that is 31st August, that is month end, that date will be displayed. That is a next month expiry. So from July, what is the next month is the next month expiry, and after the next month, that is after August, is September. So that is a far month expiry. Next is the strike price. Index option have different strike price with different premium. So here we have an option called strike price 18,500, 18,550, then 600. So for every, it will add with every 50s, that is 650, 700, 18,700, 18,750. So how this strike price is calculated? Based on the spot price. This is the spot price of Nifty, that is 19,300. Here I have mentioned this is a spot price of Nifty. So based on that, we can select the strike price. So the strike price will be ITM, ATM and OTM. The main thing in the option chain is call option and in the put option. The left side is the calls and for the right side it's for the put. Okay, so here for the call options we can see the OI, change in OI, volume, IV, LTP, then change, then bid quantity and bid. That next is the ask and ask quantity. Ask quantity is like how much quantity. Okay, in the center we have an option called strike price. So 17,050, 17,100, 17,150, after that 200. So it will add for every 50s. Okay, and this is for the put option. Same for the call options we have for the put option. It will start with the bid quantity and bid, and likewise it will continue. First, we will see what is called call option. So we have two options, that is call option and put option, that is CE and PE. Okay. So by CE option, the opportunity to benefit from the increase in the price of the stock or index. At that time when we can buy the call option. So we expect a bullish moment and the price to move higher. That is a bullish sentiment in the market and you are expecting that the price to move higher, we can buy the call option. That is the CE option. So when we'll sell the CE option. On the other hand, if you expect the price to move lower or expect the price to fall or say in the same place, when you expect the bearish or the neutral sentiment, we are finding that the market will fall or market will remain the sideways market. That time we can go for the sell the CE option, sell the call option, expects the price to move lower or stay at the same place. So that time we will look for the selling opportunity, that is a selling the call option. What is called put option, that is PE. When we will buy the PE option, so when you expect the market in the bearish sentiment, expect the price to move lower, at that time we can buy the PE option. When we will sell the PE option, when you have a bullish or neutral sentiment, we are expecting that the market will go up, move up, in that case we will do the selling the put option and expect the price to move slightly higher or it stay in the same place, or if there is no movement or price is consolidating, at that time we look for selling the PE option. What are the different types of options? ITM, that is in the money, ATM, that is at the money, OTM, that is out of the money. Let us include two more types of options. What are they? That is deep in the money and deep out of the money. So we will know each one in detail. What is in the money? We can see that. In the money for the call option, if the strike price is less than the current price or spot price. So the spot price of Nifty or current price of Nifty is 19,331. So any price that is less than this 19,331 is called in the money. Okay, that is strike price less than current price is the in the money, that is ITM strikes for call option. So in NSE website we can see that these are the strike price which is less than the spot price. So this is ITM strikes for call option. What is ITM for put option? Strike price greater than the current price. If the prices, that is the strike price which is greater than 19,330, that is the current price, then that is called ITM strikes for put option. So here these are the price which is greater than 19,330, that is the current price. 19,400, 450, 500, 550. So these are all the ITM strike price for the put options. ATM, that is at the money. For call option and for put option, if the strike price is almost equal or near to the current price is called the ATM strike price. Here the spot price is 19,330. So the ATM strike price for call option and for the put option is 19,350 is the ATM strike price for call option and for the put option. Out of the money, OTM. For call option, if the strike price is greater than the current price or spot price, that is called OTM strikes. So the, say for example, Nifty spot price is 19,330. Okay. So the price that is greater than 19,330, that is here we can see that 19,450, 400, 550, 600, all these are OTM strike price for call option. Out of the money for put option, that is strike price less than current price or spot price. Say for example, Nifty spot is 19,330 and the strike price which is less than 19,330 is called the OTM strike price for put option. So here we can say that 19,250, 200, 19,150, 100, 19,100. These are all the OTM strike price for put option. What are deep ITM and deep OTM strikes? Strikes that are too far from the ATM options are called deep ITM and deep OTM. So the left side is for the call side and for the right side is for the put side. So the spot is 19,300. So what is the deep ITM for the call side is 18,000, 18,350. So these are the ITM, deep ITM for the call side, and for the deep OTM for the put side is the same, that is 18,300 and 350. Okay, so this is how the deep ITM and deep OTM is calculated. Okay, and the ATM is the spot or the near or equal to the spot price. Deep OTM for call side. What is a deep OTM for the call side? Here this is written as 20,000, that is above 19,300, near to this ATM strike price is ITM, and too far away from the current price, that is 20,000, 20,000. 100, 20,200. These are the deep OTM for call side and deep ITM for the put side, that is 20,000, 20,200, 20,250, 20,300. These are the deep ITM for the put side. Bid and ask, price and quantity. Price represents the supply and demand of the security. So bid and ask in the market means the demand and supply for the particular stock. So here this is written as bid, ask quantity. This is for the call side and this is for the put side. Bid price. What is called bid price? Highest price someone is willing to pay for a share is called the bid price. On the other hand, what is called ask price? Lowest price someone is willing to sell for a share, that is called the ask price. In my next video, we can see the other components of the option chain and we can see how can we interpret the OA data in our trading. This is my Telegram channel, Trader Chitra, currently having 6,557 subscribers. So today I have shared that Nifty 19,398 is a strong support, Nifty long above 19,460, and after that once Nifty touched the resistance, I have told to book the long, that is 19,514 is a major resistance. So here this is the channel where I used to share the Nifty and Bank Nifty levels every day, and live analysis also I used to share here. So this is a free Telegram channel. Those who are trading Nifty and Bank Nifty can make use of these levels and they can join my channel. Hope this video is useful to you. Please don't forget to like, share and subscribe. Click the bell icon too for my upcoming video notifications. Thank you for watching.